Hello and welcome back. My name is Philip Sirius with my brother Andrew Sirius here. We appreciate you tuning in, and today we're going to talk about how to get money from mostly institutional people like banks, the people who have a lot of it.
Yeah,
So,
banks.
yeah.
And generally with real estate, particularly with single family and small multi, you're gonna be looking for community banks.
Yeah.
You're not gonna. You might be able to get a U.S. bank, Wells Fargo here or there, but generally speaking, it's gonna be community, local banks, and those types. The big boys, they either like homeowners or enormous institutions buying apartment complexes or things for the most part. So community banks is generally where you're gonna be looking.
Yeah, and so we have built up a lot of relationships with banks over the years. I don't even know how many off the top of my head, but it's been incredibly
We'll
important.
give some shout outs. If you're in Kansas City, Fidelity Bank, Tri-Century Bank, Cornerstone Bank, Bank 21.
There's more,
Yeah.
but they're very important to create those relationships as soon as you can because rates are very low at this moment, historically low in some ways. But what we've been hearing a lot is people can't get loans, and banks are typically only wanting to loan to people who they already have relationships with. So it's important to make those relationships when you basically at all times, when you don't need them, when you do need them, because when banks stop lending, a lot of them tend to follow each other and they all tend to do similar things. So if you have 10 banking relationships, when they stop lending out, you'll have 2, and then you need to keep those 2. But if you only had 1 and that one goes away, you're in a little bit of
And
trouble.
generally, just to this doesn't really help anybody who's starting right now.
Yeah.
But right now, all we've been hearing is that banks they're still lending to their trusted clients, people who they've worked with, but they're not taking on new business now. So that's okay. That doesn't help right now. But there are exceptions. There are banks that are going to go against the grain, and also eventually we'll get through this. We'll go on to the next bull run, and you can then you can set yourself up for whenever the next bear run is.
Well, and also, I mean, if you are looking for a bank, we have some ideas of how we found them in the past, and they are still looking to lend. That is kind of the business that they're in. So, Andrew, what are some ways we've kind of been able to acquire relationships with banks?
The best, well, this is generally true for everything. The best thing you can do is referrals. And this is hard with like contractors. If you go to your local RIA, Real Estate Investment Association, and ask, hey, well, who are your best contractors? Well, I got them running around the clock. I ain't telling you. With banks, they don't care. And they'll generally, okay, yeah, these are the 3 banks that we use most. Like, I just handed them out right at the beginning. And the reason is, I mean, first of all, it doesn't bother me if you get a loan from that, but also they like me more if I'm giving them business.
Yeah.
So pretty much every investor you meet will just give you the banks that they use. And if they are lending to other real estate investors, there's a decent chance they will lend to you. Same thing at these network events.
Yeah.
A lot of banks that are looking for investor loans, they put their cards there. A representative goes there or something like that. This is true for like the Real Estate Investor Association meetings. If you're buying apartment complexes or something that's bigger, you go to the CCIM meetings. There are nowadays there's huge a ballooning number of real estate associations and real estate meetup groups and things like that. Go there and just start asking like, hey, I'm looking to get invested. I'm having a hard time finding a bank. Do you know one that likes lending on single families, on small multis, on in this particular area in Kansas, in Missouri, or whatever? That is the best way. Any sort of referrals is the best, and probably second is banks who go to these events themselves or bankers who go to them, because I mean, why would they be going to them unless they're looking for business? And the type of people that are going to find there are people like you. And there isn't, the nice part is, unlike contractors, unlike vendors, there's no scarcity here.
Yeah.
The bank, everybody's willing to share their banks, where they're not going to share their contractors. They're not going to share private lenders. They will never share private lenders, but they will share banks.
Maybe occasionally, but it's rare.
Yeah, and then of course, you can also just look up local banks. Again, I start with community banks much more so than larger institutions. And you just call them and ask. Just cut straight to the case. Cut straight to the chase. Just ask them, do you, are you interested in lending to investor buying single-family properties, investment properties in this area, this price range? Usually, if it's just a no, they'll tell you. And a quick no is a lot better than a long no.
We've had plenty of long no's.
Sometimes quick no's are better than long yeses, even. But they'll usually tell you if it's just not even in the ballpark. And then You can look for mortgage brokers or mortgage bankers. We've had a little bit of luck there. But also one kind of unique strategy we've utilized for finding potential banks that's very unique is to go to a list website like ListSource or
Let's not
DataQuick.
say we did it. You did all this. But
Okay, yeah, it's all me. I am truly I astound myself with my truly incredible
fair.
skills and talents. But you go to a so DataQuick or ListSource. We use ListSource, and then pick your area. This is an area you invest in a lot. Like for example, Grandview, Missouri is a suburb of Kansas City. We invest in a lot. Pick that. Last loans made the previous year, and loans made to non-owner occupants in a certain price range. So we'll say loans between $50,000 and $100,000, kind of what we're looking for. And then just get the list. If you can just pick institutions, it's better, but just get the list, and you'll have every single person who's made or institution that's made a loan in an area that you're looking to invest at a price point you're looking to invest to investors, to people who aren't living there. If they're willing to lend to people who are exactly like you, they're willing to probably lend to you as well. And so then you just get all the banks there, and you just call them up. And we found one of our absolute best banks that way, and we found, I think, one or two others that way as well. So, referrals are the best, but you can pretty much just call around, and then you can just try to narrow it down. Find same way you look for sellers and looking for motivated sellers. We're not looking for motivated banks, but we're looking for banks who are interested in the type of loans that we are looking to get. So you just finding people, you want this, they want that, find it.
And I mean, it just kind of at some point comes down to part of the job of being a real estate investor, pounding the pavement. A lot of people do drive for dollars in terms of trying to find houses to buy. You don't drive around looking at banks that are in bad condition, but you can look on Google and just call every bank, try to get in touch with their loan officer, tell them what you have available. I mean, we've gotten involved with quite a few banks that we've never done business with because their terms weren't just good enough. But if no one else is willing to lend to you, not great terms are still the best terms you're getting if they're willing to loan to you.
Yeah, and I'd say settling for one bank is not a particularly good idea.
No.
Or two or three. I mean, we have banks that we have a couple of loans with, and it's kind of like, what's the point? But at the same time, having a couple of loans, we would have a little bit of a relationship, and let's say we lose a couple loans or we hit their maximum. We've hit the maximum of some banks before, and one of our best banks we hit the maximum of. We can't really borrow from them anymore, and eventually we're probably going to hit more maximums. At least that's the plan. The plan is to max everything out. And so having more relationships that are kind of there and can be furthered is certainly something you should look for.
Well, and just in terms of competition, if you only rely on one bank and all of a sudden they start changing their terms, you're kind of, wait, I don't want to pay this interest rate, or now you're doing 20-year AMs instead of 25. If you have a lot of different banks, they're all competing, in a sense, to get you only have so much property for them to lend on. If one bank doesn't give you great terms, the rates just went down, but they didn't lower their rates, well, go to the bank that actually did. Go to the bank that's giving you what you want.
Yeah, that's the other thing. It's so much easier to walk away from a deal if you can say no. If you don't need it, you can walk away, and that gives you the negotiation ability. So this is especially, I think, it's much more true with selling than buying. But if you don't need to sell, if somebody's like, I would like to buy your property, like, well, I don't know, make me an offer. You're probably not going to take anything less than full market value or even maybe a little bit more. If you are desperate to sell because you're about to get foreclosed on, you need to move out of state, whatever, you're going to take, and they're like, I don't know anymore, and like, okay, just take it, please. I'll drop the price $10,000, whatever. A bank comes at you like, I'm going to offer you a 10-year amortization with 6.5% interest and 5 points, and you desperately need that loan, or you're going insolvent and you file, Chapter 7 or whatever. I guess we're not corporations. File Chapter 11. No, I got it backwards. Chapter 11 is corporations. Chapter 7 is, okay, we'll edit that out. But no, you need to take the loan. We actually found ourselves in a situation kind of like that one time where we had appraisals come in, and we were thinking we needed to take those because we needed to get, this was back many years ago, and we needed to get this loan out because we had a lot of unencumbered properties, and the appraisals were bad. We knew we could fight them and get more on it, but if we did that, then we'd delay the whole thing, and all of a sudden, then we had these problems. Like, we might have to pull out a private loan or just be a mess. So again, the ability to walk away and having multiple lenders gives you that ability. Makes it so much easier to negotiate and to say, no, I think I'm going to take this other bank's offer and the like.
And one other point, it's a lot easier to find lending partners and institutional banks when you actually have a real product to lend on. Calling before you actually have the product is something you can do, but it's really hard to talk specifics when you don't have a property you're trying to get a loan on. So if you already have a relationship with a bank and you've done one or two loans with them, that third property you get or that third loan you're looking to get, shop that around, because that's your best chance to find that second relationship. It doesn't mean you can't go back to that first bank that you've been working with, but use a real product to start the conversation and do something real. A lot of people they won't give you a lot of energy if you're going like, well, maybe someday will you loan on this property. Find a real property, a real loan you're looking to make, and that's when you can start developing those relationships.
Yeah, now I think we're going to go in our next video on how to build relationships with banks, how to submit loan documents. But the last point I'd make is if you haven't bought a property yet, and you're looking to, say, burr the property out so you get a private loan up front and then refinance at the end, don't hesitate to start looking for a bank. Even if you don't have one up front. Yes, the second one or the third one, look for a second or third bank in my opinion. If you can't find one, go back to your original. But it's not too early to start looking for a bank, even if you haven't found a property. And often, if you plan on buying the property with a bank, it's probably too late to start looking for the bank after you found the property. You want to find it before, preferably get a pre-approval letter if you're planning to get a bank loan to purchase the property. If you're planning on burring it, though, and using private loan or your own money and then refinancing after the case, it's still not too early. I still start searching and seeing and finding the banks that sound interested, and that you cut your time down and really jump to the chase much more quickly.
Well, we appreciate you watching this video, everybody. Like I always say, it is legally obligated for us to tell you to subscribe to the channel, to like the video, to share it on TikTok. Only TikTok, not the other ones.
None of them matter.
But it is legally our responsibility to tell you, and I believe it's going to be law soon for you to legally subscribe, so you might just want to get that out of the way now.
One of those buttons on there.
But we appreciate it, guys, and we'll see you next time.
Have a good one.